You bought smart, but the market shifted. Now you need to move, and selling your home would mean bringing cash to closing, and you can't rent your home for enough to cover the bills. You feel stuck between a rock and a hard place. Well, you're not out of options. Let me help you figure this out. I'm Julie Calza, leader of the CalzaCo team, Arizona's #1 choice for VA loan buyers and sellers for nearly a decade, and ranked in the top 0.005% of real estate professionals nationwide. We've helped hundreds of military and civilian families navigate moves with confidence, even when things feel impossible. When a home stops making financial sense and there's no easy path forward, determining the next right step for you is priority. First, take a breath. This doesn't mean you made a bad decision. Markets change fast, rates rise, insurance and taxes can increase, repairs get more expensive, and rents don't always keep up. That gap between what your home costs and what it could earn can shrink up on you quick. But when you understand your real numbers and the true cost of each path, you start taking the power back. When you're in the position of not being able to sell or rent out your home and break even, you can rent it out and take a smaller loss gradually throughout the year as a bill, while waiting for either the value to increase enough to sell without owing more money, or to be able to raise rents enough to cover those monthly bills. Your other choice is to evaluate your most strategic exit. If you can't pay the amount you would owe to sell at closing, you can still sell your home. It would be a short sale. A short sale forgives the amount, but with credit implications. And it's something that has to be filed before getting a buyer. That's a lot. Let's break it down. So option 1, rent and absorb the loss temporarily. Renting can buy you time for values or rents to improve. But it's not as simple as cover the mortgage and wait. You need to factor in property management and maintenance costs, vacancy periods between tenants, and the uncertainty of how long it could take to break even. If that shortfall is manageable, renting can give you breathing room. But if you can't afford that bill, that temporary plan can drain your savings fast, or even lead toward foreclosure, which you definitely want to avoid. That brings us to option 2. If holding the property isn't sustainable, it's time to look at strategic exits. Your lender may be willing to offer you what's called a deed in lieu of foreclosure, which is where you essentially sign the home over to the bank. It may sound like the simple solution, but it has lasting implications that you need to understand, and you forfeit control over the situation. A short sale is more of a process, but you keep some control and it's quicker and more favorable than foreclosure. Still comes with long-term implications you need to understand. Short sales can often be the best move for homeowners who can't pay at closing to sell and can't shoulder that monthly cost, especially VA homeowners who have less long-term consequences. A VA home loan short sale doesn't permanently remove your benefit. Your entitlement can be restored once the loss is repaid or otherwise settled. Compare the paths side by side. Determine your costs and your risks and your overall benefit and what makes the most sense for your life right now. Sometimes it's holding on, sometimes it's letting go. Who you work with matters, especially in situations like this. At CalzaCo, we help homeowners through complex transitions. Our experience helps you get faster, smoother results with fewer bumps and bruises along the way. You don't have to figure this out alone. You just need the right roadmap without pressure or judgment. Contact us today to make your move with confidence.